Hello, hello, hello. There we go. Okay, cool. So it seems like we're live. What I'm going to do is I'm just going to be opening up the chat here. So we've actually gone live through Vimeo. So we're testing a new technology and software. So firstly, I want to say thank you very much for joining, guys, and joining us on the webinar on the Property Channel. This is episode number 1 of the Katana Property Channel. So very excited to be running this. For those of you that are picking this up, whether you're on Facebook, on YouTube, on Twitter, or anything like that, please do me a favor, just drop me a message within there. If you're not able to, hopefully Kathy will be able to add in a couple of links for you guys to be able to join in. And you can actually join us directly through Vimeo, which is where we're actually hosting this. So it should make it a little bit easier for us to be able to have an engaging conversation and be able to ask a lot more questions, be able to get you guys a lot more answers. So hopefully you're busy picking this up. I'm just going to check into our Twitter at the same time. Ah, perfect. Yes. Hello. Hey, guys. How you doing? Andy and Maureen, awesome to see you guys. Are you guys chatting through Vimeo, or are you chatting through Facebook or any of the others out of interest? Just want to sort of check in because this is the first time we're running it through Vimeo. And I want to see if this is actually working at all. So sort of looking forward to your answer on the back of that. This does sort of change the way in which we're going to be operating this. So I'm quite looking forward to this. Actually, it should be an exciting session and should be very useful. We're going to be talking a little bit about the coronavirus, the effect it's having on the marketplace, the current effects, and what we're looking at doing in the future. Okay, great. So you've received an email. You've clicked on it. It's brought you through into this website, and you can actually watch directly through the Vimeo website, I'm presuming. Is that correct? Just sort of want to check in and make sure. For everybody else who's busy checking in, please do let me know where you're in. You should hopefully have a link coming through for Vimeo. Just join us on the Vimeo. Kathy, if you're on there, could you just check in as well? So Kathy's the lady who deals with our marketing side. Just lets us know where we're at. Right, either which way, let's get started. So firstly, okay, chatting as guests on Vimeo. Okay, perfect. That makes perfect sense. Right, so thank you very much for taking the time. Really appreciate you joining us here on the Katana Property Channel. We've put aside an hour for your programming pleasure, where we're going to be talking a little bit about property, a little bit about Katana, what we do, a little bit about the marketplace, the coronavirus, and everything around that, just to sort of discuss how the marketplace is currently acting, what's happening in the marketplace right now. If you're joining us on YouTube, if you're joining us on Facebook, Twitter, or LinkedIn, please do join us on Vimeo. You should be able to join us, hopefully. So Kathy, have you dropped in? Okay, so everyone's chatting as guests on Vimeo. Okay, have you dropped in all of the Facebook, Twitter, and all of those, the Vimeo link, out of interest? Because I want to make sure people get a chance to actually ask questions, and I don't want them to feel like they have to ask them on Facebook or Twitter, where I can't monitor or manage them. Or vice versa. If you could do me a favor, any questions that come up on those, if you can just copy and paste them into the chat, that would be amazing, please. Okay, so let's first of all get started. So obviously, my name is Richard Van Ommen. I'm one of the members and co-founders of the Katana Group. So this is our property mentorship and property investing company. We've decided that after years and years of experience and training within the industry, myself and Taro, who's my business partner, the Japanese cohort that unfortunately you can't see in shot, we've built a multi-million-pound property portfolio with 6 figures of income, also selling. Sold off a lot of the portfolio as well to rebuild in a better fashion, knowing what we've now learned. We've also created 7, 5, 6, and 7-figure businesses, spoken on stages in 28 different countries around the world, and had a great time doing it. And I decided that it would be a great idea to start to engage and interact with you guys a little bit more personally with the video, starting to do a lot more questions. Okay, you came through the Facebook link. Awesome. Thank you, Pedro. Be able to have a lot more engaging questions and answers with you guys, and start to build a little bit more of an opportunity where we can work with you to build your property portfolio, and it actually costs you nothing. We're going to be doing a live Q&A in the session a little bit later on. If you're joining us on Facebook, LinkedIn, or any of those, hopefully you've got a link. You can join us directly in Vimeo, where you can ask questions, and we can answer any questions you have directly on property, on the coronavirus, and all absolutely free. So essentially, this is kind of free mentorship, free training, for education. We just want to sort of give back as much as we can, especially in this time of need of the corona time. to make sure everyone has a chance to get the most value that you can. I'm presuming you can all hear me and see me okay, everyone? Hear and see everything okay without any issues? Just want to check in. If that's a yes, just pop me a yes in the chat box quickly in Vimeo, just so I know. I don't want to be talking to myself. It's always kind of weird, you talking to yourself, especially in front of a camera. Okay, so just waiting. Hopefully that's a yes. Okay. Okay. Right. Okay. Yes. Cool. So it looks like everything seems to be working fine. Brilliant. Lovely. Thank you very much, guys. Awesome to have you on as well, Clive. Great to have you get on as well, Pedro. Yeah, we've got a few of you on now, which is very cool. I think we got 16 people on so far on our very first property broadcast, which is cool. So the things that I'm going to be talking about today is I want to go through the coronavirus, the pros, the cons, what's going on in real life, how that's affecting people, how that's affecting the property market, and then my projection of what I think the effect is going to be short term and long term, and essentially how you can then start to look to mitigate that, and when is the best time to start investing, which is really the right question. Is, when should you be investing? Should you be investing now, or should you be investing in the future? I.e., when is the right time? So essentially, the coronavirus, as you guys know, we've been put into a lockdown across the UK. Unfortunately, a lot of people have been very unwell, and some people have lost their lives very sadly across the world through this pandemic. And although it has a catastrophic effect on some families, and it definitely is having a pretty heavy effect on a lot of people in their own businesses, a lot of people in their homes, and a lot of small businesses, jobs, etc. Because of the amount of time people are having to take away from work. You guys will obviously know that there's a working from home initiative. There's a lot of people that unfortunately have been let go from their jobs. A lot of pubs are closed, bars are closed, restaurants are closed, cafes are closed, gyms are closed, sports grounds are closed. So there's so many places that have been closed, and a lot of people who work within those industries, they've had to take a pretty heavy pay cut, and a lot of them are now struggling to be able to maintain their business. We've actually heard recently that in the UK, there's an estimated between 800,000 and 1 million people that are going to lose their businesses over the whole Corona period, which is, it's a pretty astounding figure. If you consider how many small business owners there are in the UK, it's a pretty big hit. So obviously, this will have a knock-on effect across the economy throughout the UK. Now, the question that you're probably really asking is, what will the knock-on effect be, and how will this affect you as an investor? And that's kind of what I wanted to cover with you guys today. So in terms of the likely effect of what this is going to do for you, this will probably put you in a position where if you consider how the whole lockdown thing is going, the whole industry, the government has pumped in 450 billion back into the economy. Okay, so that's the first thing. Now, that is actually to keep the economy pretty much at an even keel, or slowly going down, as opposed to a massive drop off the edge of a cliff, which typically it would be if you consider how many people have been sent home or having to work from home, or lost their businesses, etc. Now, interestingly enough, that 450 billion that's gone into the economy, that has to go somewhere. And obviously, you'll understand that the economy is a cycle. Money moves around throughout the economy and ends up in certain places where it gets stored and held. Primarily, some of the places that most of the money gets stored or held are stocks and shares, commodities, and property. So inevitably, that 450 billion that's been put back in the economy, when the economy restarts again, that's going to be surplus to requirement within the economy to make the economy continue to grow and expand. That's a good thing. That means, in all likelihood, the economy should, what we call, bounce back. That's the term, is to bounce back, or to snap back is the other term. Where instead of the economy continuing to go down, as soon as the confidence is regained within the marketplace, in all likelihood, that money is going to end up going back into property, and the market trend should start to see an increase again. For those of you that have actually been monitoring the marketplace, you will already have been aware and already have noticed that the UK property market has been going up quite nicely for some time. London, unfortunately, was on a steady decline until the whole Brexit thing was announced in October. Literally, as soon as that was announced, it was the first month in 18 months you saw the property values go from a decreasing on a monthly basis to increasing within London. Now, understand that all the time that was going on, property values in the north of England were still continuing to go up, even though London was going down. So anybody who's investing in London, yes, you've got the peaks, but you've also got the troughs. The north of England, fortunately for us who've been investing in the north, has continued to steadily increase in value, where people decided to pull their money out of London and head a little bit further north into Manchester, Newcastle, places like that. So as soon as the whole Brexit thing was announced, we had a bounce back. There was a very, very strong bounce back in the marketplace. As soon as confidence came back in, you started to notice a massive increase in the number of people buying properties. Now, we've got 120 direct one-to-one mentorship students. I've also trained thousands of property investors around the world. And I work with a lot of people within the property industry who all buy properties across all of the UK. And it's interesting because as soon as the Brexit was announced, all of my mentorship students who were finding deals by the dozen, so we find on average between 5 and 10 deals a month through our mentorship program, which I don't think is too bad. And those properties, they were finding it more and more challenging to be able to find deals because of the number of investors that came into the marketplace. Now, if you just use logic off the back of that, the more investors you have into a marketplace, of course, the supply of properties isn't going to go up. It's going to be staying about the same. But the demand goes up, which means inevitably the value has to also follow that and go up, which is where we've been seeing a nice steady upward trend that had started to move up quite heavily off the back of the Brexit agreement. Then what we started to notice is, of course, as soon as the whole pandemic thing kicked in with the coronavirus, uncertainty came back into the marketplace. We started to see more and more people stepping back from the marketplace. And as soon as the lockdown was announced, of course, then you can't get valuers into the house. You can't actually go view the house. There's a lot of stuff that you struggle to be able to do that fulfills your typical investing MO, your modus operandi. So what we noticed is, of course, you've had a very sharp drop off on people who are actually buying houses, although our mentorship students under guidance are continuing to buy properties in this time, because I genuinely believe this is a beautiful window. Now, there's a political line, so a line that politicians use, which is never waste a good recession. Now, I don't believe we're in a recession. I do believe there'll be a minor market correction off the back of this. And understand this is all just my beliefs. I don't have a crystal ball. If I did, this would be way easier. Is this all making sense to you guys so far, by the way? I just sort of want to check in just to make sure, because I know I'm rambling a little bit. Just sort of want to make sure that this all adds up and you guys are all with me at this point. And also to continue to make sure that the chat's working through Vimeo, because this is our first run on this. Okay, brilliant. Okay, so in terms of trends within the marketplace, if you consider logically what's going to happen, you've got 450 billion in the marketplace. The market has to go back up once the uncertainty is removed, which is, of course, the whole lockdown and pandemic. And as soon as that's removed, you're going to start to notice a lot more people dip their toe back into the water into buying property. Now, the beauty is while everyone's busy doing their tiptoe and testing the water, and there's going to be a lot of investors out there. So right now, statistically, there's 450,000 UK property investors, which is, it sounds like a lot, but if you consider there's 68 million people in the UK, it's really not that many. But if you consider the vast majority of those will be dipping their toe into the water, taking their time, significant time, to make sure that they're happy with where the economy is going. The advantage of that happening is, what do you think is likely to happen to the number or to the amount of competition you have to buying houses at that time? And obviously the answer is it's reduced, right? You're going to have a lot less competition. So you're going to have a lot less people you're competing against, a lot less investors, and a lot of home buyers are going to be taking it steady until their house sells as well. So they're not going to be pushing the boat out as fast either, which is a benefit to us, because that means you're going to have a lot less competition. So the market's going to be sitting at a bit of a stalemate, a little bit of a lull, if not going down very briefly, where we get an opportunity to get better deals. Okay, because you have less competition, by definition, you'll get better deals than if there's a lot more competition where people are outbidding each other. Now, when you get these better deals, and of course, as people start to get more confidence within the industry, they'll start to buy and they'll start to get back into it. And then you will see this bounce back, especially considering we have the 450 billion that's been plugged into the UK economy alongside. Now, the other advantage or the other thing that leads me to believe that there's going to be a very strong bounce back is, can anybody tell me, and I'm looking for some engagement and some conversation, because I love to have a good conversation. So I've got my monitor just here. This is the reason I'm looking down this way, where I can actually see all the questions and posts and everything that you guys are posting. Can you guys all see each other's questions and answers and everything? Just want to sort of check, just so you guys can see each other. Just looking for a response on this, by the way. This is the communication bit that I love. So please do ask any questions. Please do have a chat with me at this point. Yes, okay, great. So you can see other people's questions. Brilliant. So you can see other people busy engaging, and then it means I don't have to repeat questions when someone asks. Now, as the hey Rebecca, awesome to have you on, and also Rick, great to have you on as well. Thank you for joining us, and Conrad, excellent. So we got a few of you on now, which is very cool. So the other thing to consider that's going to have a nice effect on the UK property market is consider what happened to the Bank of England base rate. Now, for those of you that aren't 100% sure as to what the whole Bank of England base rate is, it is the Bank of England has an interest rate that they charge the banks and the government and all these people to be able to lend money. And the Bank of England base rate was at 0.75% only a few months back, which is typically pretty low compared to where it was even a few years ago. Now, because of this whole thing with the corona, they wanted to give stimulus within the industry and make sure that essentially the government doesn't go bankrupt, because then everybody loses everything. So they've reduced the Bank of England base rate from 0.75% all the way down to 0.1%, which is a monumental leap. Now, they dropped it to 0.25 and then to 0.1, but that is still a monumental leap in terms of interest rate. Now, the benefit of them reducing the interest rate significantly, can somebody tell me, what do you think the benefit is to you to having a significantly lower Bank of England base rate? How does that affect you as a mortgage holder or homeowner within typical life? And I'm keen to sort of see some responses, because I want to make sure that we're having some good dialogue, some good conversation. Okay. Okay. So basically, the answer is it affects your mortgage rate. So how much you're actually paying. So if you're on a tracker mortgage, you'll have X amount above base rate or above LIBOR. So LIBOR is the Bank of England base rate. So whatever your tracker mortgage is, let's say it's 1% above LIBOR. So you'd have been paying 1.75% on your mortgage. Now you'd be paying 1.1%. Exactly. Less payments, lower payments. Exactly. So that has a massive ramification for the cost of your mortgage, which is brilliant. Now, if you consider, what does that also mean to mortgage rates? Because, of course, mortgage rates are all based on LIBOR. So they lend you based on X above LIBOR. Now, as a property investor, if they're going to be lending you money and it's going to cost you less money, that means your cash flow will be higher, and therefore people are incentivized to invest in property. Okay, it is literally the best time to be investing in property when the Bank of England base rate is so low and you've got extra stimulus in the industry, in the marketplace, in the economy. So that means, literally, if you consider it, it literally means that you're going to have a huge influx of investors coming into the industry and into the space, especially those that may have been on the fence at some point. As soon as they get confidence in the industry, they'd be much more likely to get involved. Now, I see some of you guys might be saying, yeah, but what happens if they increase the Bank of England base rate? Let me ask you a question. Is that likely to happen quickly? Because if you consider a drop of 0.65% might mean a savings of £300 a month on somebody's mortgage. And at some point, their life lives up to that income. So most of us in life, we live based on our income. So whatever we earn, that's what we tend to live on. Now, imagine all of the homeowners that have now moved to their new income base because they have extra income, and the Bank of England increases the base rate back up to 0.75%. A lot of these people will no longer be able to afford to pay those mortgages because their other life expenses would have increased. Okay, so in all likelihood, what will most likely happen is they have to increase the base rate extremely slowly to prevent these people not being able to afford the mortgages. Because, of course, if they can't afford mortgages, inevitably you have repossessions, which inevitably means market collapse at some point. Okay, and I promise you, nobody in Parliament ever wants to be the person who's been at the helm throughout a recession, which is why they all fear the bubble. They all go through all of this sort of dialogue and conversation. So how I see it right now, my personal view and my personal opinion is, as it stands within the UK market, the UK industry, you've got a very beautiful window that's coming up as soon as the lockdown period is released. And as soon as that is released, you're going to have a nice window where a lot of people aren't yet ready to invest. They want to see how things go. And you might have a small correction in the marketplace to account for that, which is not bad. But that small correction in the marketplace is the perfect opportunity for you to be buying properties at a lower or bigger discounted price, which enables you to get a better return on your money, which enables you to get a bigger portfolio because you need less money per house. Hopefully that makes sense to you. I imagine it does. It's pretty cool. Now, obviously, that's not the only thing to consider. The other thing to consider is what should you be doing with your time now? So we're sat down in lockdown. Like myself, the same as you. I'm literally sat here in lockdown. I'm running this out of my office, so I've got a small office in my house. My wife's downstairs with my 1-year-old. My kids are in bed asleep, which is brilliant, which means I don't have a noisy time while I'm on this with you. But I'm essentially here just having a dialogue with you guys from my own home. So, what I've decided is a great use of my time is to re-educate myself. Now, I've been in the property industry for quite a significant amount of time. My business partner has been in the industry for decades, and it always strikes me how much things continue to progress, how much things continue to evolve, and how much there is to learn. I will never ever tell you that I know enough about property to know everything. I'm nowhere near that point because every mistake I make, everything that I go through, there's always another learning opportunity. There's always something else to be taken from that mistake, that lesson. And for me, what I like to do is I like to try and limit the number of mistakes that I make throughout my property journey by trying to learn from others. And the easiest way to learn from others is, good books, so good educational books. Spending time with your property mentor. So I spend a lot of time with my property mentor, consuming educational information. So whether that's videos, or books, etc. I do a lot of research on investment areas. So we've got a technology that helps our mentorship students build property portfolios across the UK. And essentially, off the back of that, that technology, I continue to look at how we can refine and improve that, what we can use to streamline that. We're in the midst of doing a lot of background work to make that work significantly better right now. The tech developers are all working from home, ironically, but they're continuing to move forward and make leaps and strides with that. And the other thing that I've decided would be a great idea to do is to actually take our entire mentorship model, our mastermind model, everything to take that online, which is very, very exciting. So, I mean, for our mentorship students, we run 2-day trainings, we run 3-day trainings, we run masterminds, which runs once a month. And we used to do everything face to face. And we've decided to move everything into the digital era. Now, I know a lot of people are doing this across many, many industries. And there's going to be a lot of noise around the digital industry and the video industry, but I honestly think this is the way forward, because right now you'll be sat there wherever you are, probably in the comfort of your own home because of lockdown, with the missus or something, or your husband or kids or something around you, while having an opportunity to consume and listen and learn. And hopefully, you guys are getting some value from our dialogue and you're learning. And also hopefully getting some inspiration and also some motivation as to, this is the right time. When should I be moving forward? How should I be doing it? What's my next steps? Who should I contact? Etc. 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 So that for me is the most wonderful thing about the digital era, is because I can literally present to you while you're in the comfort of your own home. I'm in the comfort of my own home. I no longer have to travel all around the world, sitting for hours and hours on flights. Just to come and present to you. I can actually do this no matter where you are in the entire world, and you can just tune in, you can listen, you can catch the recording, and we can hopefully have a good dialogue. Now, if you are watching this recording as opposed to watching this live, you're more than welcome to post any questions you have on the videos. It's going to be on the Facebook group, on the YouTube page. It's basically going to be everywhere. You're welcome to ask any questions you want, and it'll either be myself or one of the team that'll be answering you. And that's any property questions you have. I'm more than happy to assist, more than happy to sort of move your property journey forward by trying to assist in any way possible. Speaking of which, we also run live training. So we run 3-day seminars. So if you want like a full jam-packed training course on how to invest in property, everything you need to know, how to get started, how to select your area, how to select your strategy, book your viewings, find the right properties, view the houses, make the offers, etc., etc., etc. If you want to understand all of that, we actually go through that in a 3-day live training, which we're running one ironically next weekend, which will be a live stream, and you can catch that completely at home in the comfort of your own home without having to go anywhere, which is wonderful. And that'll be Friday, Saturday, Sunday. If it's something that interests you, just honestly, all you have to do is just drop a message in the comments. Me or one of the team will reach out to you. We'll tell you how you can get yourself involved. It's not expensive. It's super cheap, actually. And we do it specifically because we want to help people build their portfolios. And also be able to build a community and spend a lot more time with other property investors. Now, I understand the time spent here isn't the same as if you're in a seminar room. The conversation isn't quite as easy, but you can drop messages in the chat box. You can see other people. You can hopefully start to engage. And if you've got any questions at all, please feel free to ask. Um, now, in terms of everything that I wanted to cover in the session, I mean, that pretty much covers the core information in terms of the coronavirus and what you can be doing from the comfort of your own home. What I want to do is I want to start to open up the floor to any questions you might have around property, any fears, any concerns, anything you'd like to discuss. This is literally the perfect time to ask any questions you have in the chat box. I will make sure I put aside half an hour for each of our calls. Is going to be a general Q&A, and it's just answering any questions and answers as people have. Now, until we have some questions through, which I sense is going to be a reoccurring theme where we wait for people to post their questions, I'm going to be doing just some board work, which I think is always very interesting and very useful for you guys to see. Out of interest, who'd love to learn how to buy a house for £10,000? This is one of my favourite little elements of board work. Who'd like to learn how to buy a house for £10,000? If you would, then all you got to do is pop a yes or a Y in the chat box, and I'll show you how you can buy a house for £10,000. Now, just so we're clear, I don't teach money in, money out. I see this all over the place, and sure, I mean, there's ways in which you can do no money down deals. That's the term, no money down deals. Unfortunately, some of them are either not legal or not ethical. You do get a couple that work. I don't teach them because the way in which you do it, you have to be very highly skilled, and you have to be negotiating very, very hard. So I would rather teach you stuff that works in today's marketplace and make sure okay, really good question there, Kathy, and make sure that you guys get the most value from your time here. Okay, do I think lending will be harder due to the virus? So that's a really, really good question, Kathy. Thank you very much for asking. So what we tend to find right now with the mortgage lenders, so you'll have seen a lot of publication and publicity within the newspapers where they're saying, oh, you know, the coronavirus has stopped the property market. Now, if you actually read through the article, you'll see that that's not at all what's being said by the mortgage lenders or by, you know, the UK government or anyone. Unfortunately, newspapers have a knack of overemphasizing what's actually happening in the marketplace. And that's very simply because their job is not to report facts and the truth. Their job is to sell newspapers. If you believe that you get all facts and truth from newspapers that don't have the slant and the propaganda behind it, then unfortunately, I hate to burst your bubble for you. You are sadly mistaken. The newspapers, they're purely to sell newspapers and make money. That is it. It's propaganda. They have their left-wing and right-wing views, and that's what they're trying to impress upon you. Also understand drama sells. So if they over-dramatize anything, it makes things much easier to sell, just so you're aware. Okay. Now, in terms of mortgage lenders, what's actually happened is mortgage lenders have approached the government and said, we're having difficulty to be able to lend money out right now because we can't get our valuers to look at the properties. Now, for those of you that understand the investment process, this will be simple, but if you don't, basically the investment process is when you're buying a house, you apply for finance, and the finance company will send an independent valuer out to the property who will go and take a look at the value of the house. And they will dictate, they will say, okay, so I believe the house is worth X, and the bank will lend you money based on that. They won't lend you money based on just I want 150 grand. Okay, they make an estimate on a valuation, they lend you money based on that. Okay, that's how it works. And this is where you get down valuations and up valuations and all this kind of fun stuff. So the RIC surveyors, the people who value the houses, because of the lockdown, they're not able to currently go around to the houses and value the properties. And therefore, the mortgage lenders can't lend money because they don't know if the house is actually worth what the client is saying. So it basically inhibits the entire industry from being able to move forward if people are buying based on finance. Now, if you're buying with cash, or you're buying with, you know, investor cash, or you're buying with a joint venture partner, so somebody you're in business with, and it's all cash, it doesn't matter. You can still buy it. Now, they're urging people not to be moving homes at this time, which I understand, but there are many, many vacant properties, investment properties that you can be buying right now and getting yourself all primed to start to do the refurbishment and get yourself rented out and start to generate an income. So in terms of lending, yes, things have slowed down, but it's primarily not because of the virus in terms of they've stopped lending. It's primarily because they've prevented the valuers from going out. Now, the follow-up question to that is, might you see a change in interest rates from the banks or percentages of lending? Yes, you might do for a period of time, while again, they assess the impact of the marketplace. Now, the irony is if they change what they're willing to lend as a percentage, that will have a negative impact on the marketplace. But they're doing that because they're worried about a negative impact on the marketplace, almost as though they are creating a self-fulfilling prophecy. But I see that they will probably be doing 65 to 70% lending as opposed to 75% lending. And what I mean by that is, if you're buying a house for £100,000, right now they'll typically lend you 75,000. They might only lend you 65,000 or 70,000, meaning you have to pay a larger deposit. And then as soon as they gain confidence back in the marketplace, they will continue to push money back through again. Hopefully that answers that question for you, Kathy. Another follow-on question to that, we've got quite a bit of time, so I want to make sure you guys get the most value. A follow-on question to that is often, look, how does the whole money trail work? Do they need to lend money? So if you understand, the Bank of England loans money to the banks via the government or wherever else, but they loan money to the banks at a set interest rate. And they don't lend the bank, okay, so here's 100,000 for that mortgage, here's 300,000 for that mortgage. No, they lend them, here's £1 billion. Okay, off you go. You owe us 2% a month interest or 3% a month interest. Now, the banks have to pay that interest rate whether they've loaned the money out or not. So what they want to do with the money that they currently have in their coffers is they want to lend it out as fast as possible, because otherwise it is costing them money to keep the money as opposed to making the money. Now, I believe this is primarily one of the reasons they dropped it down to 0.1% interest rate, to stop the banks rolling over. That's my personal belief. So that's where you're going to start to see a little bit of a knock-on effect there. Now, that means that mortgage lenders will want to keep lending money out, and as soon as things settle down a little bit and the dust settles a bit, they're going to want to get the money out as fast as possible, and therefore they're going to get the interest rates back to where it needs to be. They're going to get the loan to value, which is the percentage they'll lend you, back to where it needs to be as quickly as possible to get their money back out, because they are competing with a lot of other mortgage lenders in the marketplace. Hopefully that answers your question and a little bit more as well off the back of that, Kathy. But yes, great question. Thank you very much. Now, Pedro, what do you expect to happen on the customer end? Do you think tenants may shift their preferences in terms of property, i.e. HMOs, bigger, smaller properties, out of the big cities, etc.? So, Pedro, really, really good question. I think some people will be a little bit scared and intimidated with everything that's gone on, and they may decide to move out of HMO or shared houses and move into apartments. I think that's totally possible. Do I think it's likely to be a big enough majority that you would actually notice a marked impact in the industry? I don't think so. Interestingly enough, tenants need to rent. They still need places to live. The reason they're renting is because they cannot afford to buy. Therefore, they will continue to rent. Now, that basically means they'll probably stay put where they're at. Now, you'll have noticed a lot of tenants, for those of you that have fears around this, a lot of tenants would have asked for their payment holiday, where they say, look, I want to have 3 months off of paying my rent because, we've got the coronavirus, it's affected us and blah, blah, blah. So the first thing is to check, has it affected them? Okay, because if it hasn't affected them, if they're still working their job as a key worker or whatever else, it hasn't affected them. It hasn't affected their income. They're basically trying to push things back. The thing that you should remind them of, which is very, very useful, is remind them that it's a payment holiday. That money is still due. Okay, what it will mean is for the remaining 3 months of their tenancy, they will have to make up 6 months worth of rent. The money isn't written off, it's not lost. It's just passed further down the road. It's a payment holiday. Now, interestingly enough, if you let the tenants know of this, and it's completely fair, and it's, you're doing it in the best interest of them because you want them to get back on their feet as well. If they really need it, they will take it. But you'll find that the vast majority of them don't really need it. They were just trying to chance the arm and trying to get a bit of a discount in terms of what they could pay. So that would be my suggestion when it comes to that. Now, as a whole, I think the tenants will likely, their preferences will stay very much the same. They will continue to live in similar areas around the similar people doing similar things. Unfortunately, the population of the UK may have depreciated a little bit, but if you consider even on their worst projections of 200,000, that is still less than, well, that's 0.02% or 0.03% of the country. So it's not, although it's a big enough percentage, it's not big enough to have an impact in terms of the number of tenants available in the marketplace. I appreciate that sounds terrible to say, and I genuinely feel very, very deeply for a lot of those families affected. We've got friends who've been affected quite heavily with this as well, and it's a terrible thing that's happening. But in terms of a logical standpoint on how this is going to affect your property investing and your tenants, I honestly don't think you're going to see a particularly large difference. And as a matter of fact, I think as soon as the dust settles, life will just go on. It's interesting because I've heard a lot of people say, "Oh, well, this will change the way in which the world is forever, and everything will forever be different." I don't see how. I don't see how. I think it will just revert back to what it is. People might wash their hands a bit more. People might wear more masks when it comes to the metro. I still see a lot of that. So, in terms of actual effect and actual change within the industry, I don't think you're going to see a major change. I just think there's going to be some minor stuff that's going to be happening in the interim. Yes, hopefully that answers your question there, Pedro. I appreciate it was a very quick answer to quite a long question. So hopefully that gives you the answer you're looking for. So has anybody else got any questions? Any other questions you'd like to get the answers to? If not, then what I'll do is I'll show you how to buy a house for £10,000, which should be pretty cool. So I'll give you guys a second to write any questions, and I'll start to go through this in the meantime. So I'm just going to flip my mic across to the other side. So bear with me 1 second. So I've got a little lapel mic, just because it is plugged into my computer, and I don't want to turn around and pull my computer off the wall. So in terms of markers, so this for me is a pretty cool example. So if you consider, okay, so in the current scenario, can tenants refuse to pay rent, say for the next 3 months, without option of legal recourse? So Ashu, really good question. So I'll do this example in just a second. I'll answer that. That's a really good question. Thank you for asking. So tenants can refuse to pay rent. They can say, I'm not paying rent, and you can't evict me for 3 months. That's fine, because you can't evict them for 3 months. The government allows that to happen. However, there is a legal recourse after that, because that money isn't lost. They haven't just not paid the money. You are legally allowed to claim that money from them. Now, my suggestion is, if they're going to be really shirty about it and try and be obnoxious, is to say, look, please understand that I'm happy to give you a payment holiday, and of course request one from your bank as well to make sure that you're not out of pocket too much on a monthly basis. If just say, I'm happy to give you a payment holiday, but please understand that money will be due still, just further down the line. So it's not like you get away with 3 months rent. It still has to be paid. And although you might not be able to evict them for the next 3 months, there's nothing stopping you after 3 months chasing that money, lodging CCJs. So a CCJ is a county court judgment, which basically makes it very difficult for them to rent property in the future. Okay, for the next 6 years, as a matter of fact. So it's a very, very heavy hit. It's called the double barrel principle. Now, I don't always think it's the best way or best approach. So if you're going to do it, I always suggest doing it in a way where you say, look, here's your options. This is what I'd rather do, where we can get this settled amicably and we're all okay. If you leave me no choice, this is option B as to what can happen. So let's choose for option A, and just sort of give them that as a choice, so that they know that you want to work in their interest, but you have the ability to make their life extremely difficult. So you can lodge the CCJ, also claim the money back, also evict them post the 3 months, okay, or whenever the lockdown is sort of settled and done. Hopefully that answers your question there, Ashu. Really good question, though. Thank you. Really, really good question. Okay, please, any more questions, please post them. I'm more than happy to answer all of them. I've got as many answers as I've got, and I'll answer everything I can. But in the meantime, let me show you how to buy a house for £10,000. So let's just say initially you end up finding a house. Just want to check, can you guys see the image all right, or is it a little bit too small, a little bit too big? I just want to sort of check in. Unfortunately, I can see what I see on my screen, but I don't know exactly what you're seeing on your screen. So hopefully the image is okay. So do just drop me a message in the chat box. Yep. Okay, great. Really glad you got that, Ashu, and really glad you got the value, which is good. Okay, so you find a house and you've got a purchase price, so PP's purchase price of 60k. So you buy a house for £60,000. Okay, nice and simple. Nice property in the northeast of England, or northwest of England. Very easy to buy a house for £60,000. Then, of course, it's not just about buying. You also need to refurbish the house, because we always administer the best way to be able to get the best discounts is buy a house that needs refurbishment. So we call these smelly houses. So that's the term, smelly houses. You always want to buy a house that needs a bit of a work, because that's where you get your best discounts. Okay, so you buy the house for £60,000 and then you refurbish the house. Let's just say, for the interest of the example, the refurbishment is £20,000. Nice and simple. Okay, now of course you've got other costs as well to consider. So you've got things like stamp duty, which is a tax you have to pay to the government. They basically making you have to bribe your way into buying a house. Very crooked, but welcome to the government. You've got stamp duty. You've got to pay solicitors, so legal fees. You've got to pay mortgage brokers. You've got to pay structural service. There's a whole bunch of other costs to consider. Now, we actually go through these at length in the 3-day training. If you want me to go through these at length at any point, please do let me know. I'm more than happy to. Okay, but essentially, other costs in this example, we're going to work based on £5,000. So please understand that I love to teach concepts, because when you understand the concept, you can apply that to reality. However, if I teach you all the granular detail, we're going to be on this call for probably 2 hours. You're going to sit there and go, okay, great. What was the point of what we're doing again? So let me teach you the concept, and then you can apply the granular detail later. Hopefully that's okay to you. Okay, so at this point, how much money have you invested? So purchase price of 60, refurb of 20, other costs of 5. How much money have you spent so far? Just want to check it. How much money have you spent so far? Let's see where you guys are at. It seems like we have a bit of a delay on the chat here. So if I end up stalling for time, please understand that I'm not trying to stall for you. I'm trying to stall just to make sure that I'm getting a response within the chat box, because it seems like we've got like a 5 or 10 second delay. Okay. Apparently we've got high CPU usage, so we keep dropping into low and high resolution. So apologies for that. Okay, so in total, 85K. Okay, brilliant. See, now it's all popped through. It's interesting. So £85,000. So that's how much you invested at this point. Now, because you've done such a stellar job, you would then speak to a mortgage lender. You'd say, hi, I'd like to refinance my house. And they would send out someone called a RICS surveyor, a RICS valuer. As I was explaining earlier, they come out and value the house. And in this instance, in this example, the RICS valuer is going to come out and he's going to say, you've done such a great job. Your house's value is now £100,000. Okay, nice and simple, right? Now, the important question is, when do you think you're going to know how much the house is worth, or roughly how much the house is worth in good condition? When do you think you need to know that figure? Okay, and this is the million-dollar question where a lot of investors tend to go wrong. Okay, and the answer very simply is you need to know this before you put in your offer, because otherwise, how would you know that you have a discounted deal? Okay, so you need to have an understanding of what this amount is. Now, the real challenge, the golden nugget, is actually understanding how to know this. So you've got a number of ways. You've got things like sold comparables, where you look online, look at other houses of the same type, same style, same size, see how much they valued up at, okay, in terms of what they've sold for. So sold comparables, not for sale comparables, sold comparables. Okay, you also want to be speaking to 3 separate local estate agents, because you need to get an idea on what their thoughts are. Your estimate is not going to be enough. Consider this is a jigsaw puzzle, and it's a metaphor I use a lot. Consider this is a jigsaw puzzle, and you need to put in the pieces of your jigsaw. Okay, the more pieces you have of the jigsaw, the easier it is to see the clear image. Okay, so the first jigsaw piece is your local comparable. Second is the estate agents. Third is some online valuation tools. So right now you've got one called Home Track with a T, Home Track, which is okay, but it's £20 evaluation, so it's not cheap, although they're pretty good. We're in the midst of building our own valuation tool using machine learning, so artificial intelligence, completely different to what Home Track does and any of the competitors, Valpal, etc. And they are like, essentially it will be sitting in somewhere about 95% accuracy. This is what we're aiming for, because it's using machine learning and artificial intelligence. And it's going back over the last 9-10 years worth of data, which will be very cool. And we're going to be doing that for very low cost. And I think it'll be pretty much free for all mentorship students to be able to run valuations through there as well. But yeah, just a useful insight. So the value is 100K here. Now, how much will the bank lend you currently as a mortgage? Oh, wow, check me out. So how much will the bank lend you typically as a mortgage? Okay, anybody want to hazard a guess? So as a percentage, the bank will normally lend you 75% typically. Okay, typically, which equates to 75K. Okay, 75K, exactly right. Okay, I know it's going to come popping through in about 5 seconds. We've got this long delay on messages. So it's going to be about 75K. Now, the interesting thing is you've currently spent 85K, okay, and the bank has just given you 75K, which means you spent £10,000 buying the house. That's it. That's all you spent, 10 grand, okay, buying the house, which I think is a pretty useful thing to understand. So often when people say to me, yeah, but how do you build a multi-million-pound portfolio with only a couple of 100,000? You know, worth 100,000. Well, very simply, you just make sure you're buying for a big enough discount so that when you buy it and refurbish it and refinance it, you have a minimal amount of money invested in that property. Now, the more fascinating thing with this, is it okay if I take this to the next level and show you something else pretty cool? Is that okay with you guys? Just want to check in because like this is stuff that I love. I find this all very fascinating. Would that be okay? By the way, if you didn't catch that, don't worry. There'll be a recording. You can watch it again and again and again and again until you're very comfortable with it. Okay. I love this whiteboard, by the way. I never really got to use it. I put it in my office like probably a year ago, 18 months ago. And I never really used it, just used it for some stuff. And now I'm doing live streams. I use it all the time. It's brilliant. I love it. Okay, so that £10,000 equates to what we call your money left in. Okay, your money left in. So that's £10,000. Okay, now let's just say your income on a monthly basis after all expenses on this house, so your income after all your expenses is somewhere, so this is called your cash flow, by the way, your income after expenses. Your cash flow per year, okay, and this property is £2,000. Just as an example, nice and simple, £2,000. Okay, how many years would it take for you to earn all your money back? So obviously you've got 10,000 invested, and then you're earning £2,000 a year. How many years would it take for you to earn your money back? I'll give you a very simple clue. It's 10 divided by 2. So make it nice and simple. Okay, and I know some of you guys are going to be 5 years. 5 years, just 5 years. So 5 years. Now this is where it gets a little bit more interesting, because in 5 years' time, how much money do you have invested in the house? Okay, and I'll give you a very big clue. It's on the board. Okay, you have £0 invested in the house, which basically means you own the house for free. 5 years' time, you own the house for free. Who's okay with owning a free house out of interest? If you are, just give me a me in the chat box, just so I know that you guys are interested in owning a house absolutely for free in 5 years. Okay, because this is pretty cool. Okay, now let me take this to the next level. Let's make this a little bit more attractive, a little bit more exciting. Okay, let's just say the house is worth 100K. Okay, 100K. You've got a mortgage of 75K. Okay, that's your value, your mortgage. Okay, then you have something called equity. Now, equity is basically the difference between the value of the property and the amount that you owe to the mortgage lender. Okay, then you have equity. Okay, now your equity in this instance is 25K. Okay, after 5 years, of course, before 5 years was less, but after 5 years, your equity is £25,000. Whose money is that? And this is the $1 million question, and that money is yours. So not only have you bought a house for £10,000 that after 5 years you now own for free, you also have £25,000 worth of equity value. So this is wealth. So this is your wealth plan. So you've got £25,000 worth of wealth in your personal name, which I think is pretty cool. It's pretty exciting. So certainly something to consider. Now, let me take this one step even further if I can. Okay, one step further if I can. So how long would you be having, or how long would you basically earn the cash flow? How many years would you continue to earn cash flow for? Okay, how many years would you continue to earn cash flow for? And that's the big question, right? Which is as long as you own the house, right? So you're earning 2K a year for the rest of your life. It's a pay rise of 2K a year for the rest of your life. You never have to work for again. And you've got equitable value of 25K. So wealth of 25K for the pleasure of doing that. Okay. Now for me, this is kind of the gem. This is the beauty. This is what makes property so attractive. And this is the kind of stuff that I think, this is what blows my mind. And I wish I knew this when I was still in school. So I'm sort of making it a mission of mine to start to educate people. This is forming what the purpose of this whole sort of property channel is all about. Is to start to educate people, start to inspire people, and start to give people motivation and enable you to start to get out there, start to invest in property, start to move forward. But I urge you, like with any single industry in the entire world, when you're taking it seriously, if you treat it as a hobby, if you treat property as a hobby, you're going to get hobby results. If you treat property as a profession, you're going to get professional results. Now, understand, hobby results basically mean you make a little bit of money, you have some issues, you have some challenges, etc. Now, when you move into any profession in the entire world, any profession you move into, there is something you have to do before you move into that profession. Okay, now if you think as a doctor or a surgeon or a lawyer or an accountant or like any major profession, the first thing you have to do before you be allowed to practice within that industry is you have to go get yourself educated. Now, I urge you, we're going to educate you as much as we can in the time that we have every single week. and we're going to be running this every week at 8 p.m. Tuesday. Of course, you'll get the recording, but live means we get some interaction, some engagement, and some questions and answers. So please make sure you tune in. But yeah, if you catch recordings, please ask your questions in the chat. I'm more than happy to help. But we're going to run this every week to try and educate you as much as you can. If, however, at any point you want to know a bit more or you want to take things a little bit to the next level, all you have to do is reach out to me or the team, and we're more than happy to help you. Now, we've got about 10 minutes left on the call. There's a few other bits that I can go through, which I think would be useful, but I'd love to open up the floor to a couple more questions. So if any of you guys have got any more questions, either about this, either about investing in property, either about any properties you currently own. Out of interest, for those of you who are on the call, I recognize a few mentorship students as well, which is really, really cool. But for everyone on the call, I'd love you to just leave us a message, whether where you are in your property portfolio. Have you already bought some houses? Are you brand new? Have you got a large portfolio? Are you looking to just take things to the next level? Like, what's sort of bringing you to this call? What's the value add you're looking for? Because I want to make sure that I cater these calls to give you the best possible value for the time that we currently have. And I'm only putting aside an hour a week, which is nice and simple. And any sort of follow-up that you need, all you have to do is reach out, and I'm more than happy to sort of work with you and help you. So I'm looking forward to some responses off the back of that. I'm like very warm in my office. Bear with me 1 second while I open the window. So it is toasty in here. Unfortunately, when the doors close, you don't have any circulation. So I'm just trying to cool myself down a little bit. So any questions you guys have, I'm opening the floor to you in terms of where you're at. If you've got no questions, I'll basically carry on. So I'll give you guys a couple minutes to get some questions in, and then I'll carry on with one or two more examples of stuff that I think is pretty cool. And then we'll wrap up with a little bit of a summary in terms of where we're at. And then we'll sort of leave you be. Okay, brilliant. So question on Facebook. Walter, awesome to have you on, Walter. Will the payment holiday affect the property investor's credit rating when it comes to borrowing? Wow. Okay, so that's a really good question, Walter. Thank you very much for asking, and great to have you on as well. So Walter's another one of our mentorship students, and it's a really good question to ask. So in terms of payment holidays affecting your credit rating with the mortgage lenders, it shouldn't do. Essentially, what the mortgage lenders will do is they will move the amount of interest that you owe. They'll just add it onto the end of the loan. Now, if you're doing what's called an interest-only mortgage, so you get two types of mortgages. You've got capital and interest repayment, where you'll be paying the interest every month, and you also pay a little bit off the mortgage debt every single month, which might sound very appealing, but at some point I'll go through an example which will show you it's not that appealing when you look at it logically. And then you've also got interest only, where you're just paying the interest on a monthly basis. So you're not paying the whole thing down, or you're not paying anything down. You're just paying the interest. So in terms of what they do is they essentially add that interest payment. So let's say your interest payment's £200. They'll add that £200 times 3 months, so your £600. They'll add that to your £75,000 mortgage, so it'll become £75,600. And then I believe your monthly payments might go up a little bit. I'm not 100% sure. It would be something to check. Unfortunately, I don't think anybody really knows. They're all sort of stabbing in the dark. But in terms of the effect on your credit file, it really shouldn't affect your credit file. I see no reason why it would, because it's an incentive created by the government. And if the banks were to adversely affect you because of it, firstly, the government would climb down their throats. I can guarantee that. And secondly, I think the banks would be in for a big fat fine. You're probably noticing the banks are getting fined a lot nowadays for a lot of shit that they did wrong. This would be one of those that they get a big fat fine for. So I do doubt that, Walter, but really solid question. Thank you very much. Okay, so Hetty comments. So I've got 2 deals going through, but I'm worried about the immediate effect on the house prices and the loan to value. Okay, really solid question. So in terms of loan to value, Hetty, thank you for tuning in. In terms of loan to value, so the banks might lend a smaller percentage. So it depends how you're buying, if you're buying in cash or if you're buying on finance. Now, if you're buying on finance, you'll probably struggle to get finance right now anyway, because you've got to wait for the valuer to go out. You can get all the legal paperwork and everything else done, but the valuer will not go out until the lockdown is up. Okay, and then in terms of the loan to value, I'd expect probably a few months, you might find that some of the loan to values are a little bit lower, although I don't expect it to be much lower. Some bridging companies, I think, would probably be a little bit more okay to just saying, look, you'll be okay. So I don't think in terms of loan to value you'd have a major effect, although it might be 5% or 10% difference. But only time will really tell. Unfortunately, my crystal ball isn't working as well as I wish it would. However, in terms of long-term effects on property prices, this is a brilliant question, and really appreciate you asking that. Now, if you just consider things in a logical standpoint, so the government's allowing a 3-month payment holiday for people that are adversely affected by this. So that's 3 months before banks are allowed to take any action on you whatsoever. So that's a payment holiday. It's not even like a missed payment. And then it's typically about 5 missed payments, if not 6 missed payments to the bank for mortgages before the bank then starts repossession proceedings. Okay. And then at the point of repossession proceedings, it normally takes 2 to 3 months as an average. It can vary depending on area, depending on house, etc. But typically somewhere around 2 to 3 months for the repossession to go through. So you're talking roughly 12 months from now for those people that are affected before it would be a time for them to actually lose the property. Therefore, the likelihood of a lot of people collapsing in terms of that is actually pretty slim, because you would expect within 6 months of that, they would then be able to get themselves back on their feet, start to make payment plans and make arrangements with your lenders or their lenders to prevent themselves from losing their houses. So in terms of houses getting sold through repossession because of the coronavirus, I think it'll be quite a marginal and small number in comparison to what many people will expect, primarily because of the 3-month payment holiday, as well as the amount of time it takes for a repossession to take hold. And I believe that the housing market will have recorrected at that point and would already be skyrocketing. I genuinely think in 12 months' time, we're all going to be looking at this going, well, that was a great opportunity. The market is absolutely flying. So in terms of long-term values of the house, I think the effects are going to be marginal, if anything. And I think, if anything, they're going to be going up by the time you'll come to refinance if you're only buying them now. So hopefully that helps answer your question there, Hetty. But really good question. Really, really solid question. Thank you. So Maureen, so to start the ball rolling, you would need to raise 15K minimum on your first 60K property. Is that correct? So really good question, Maureen. So one of the biggest questions I often get from people is, how much money do I need to start investing? Okay, this is a brilliant question. So typically what you're going to notice as a normal deal, okay, so I'll give you some figures for a normal deal, just so you guys have some basis to work on. I'm trying not to rip my mic out of the computer. I might actually have to bring my computer closer in the future. Okay. Excuse my manky cloth. It works wonders. I love this thing. So, right. Okay. So, if you consider a typical house, so let me give you a typical example. So, purchase price of, let's say, 50K. Sorry, let me try that again. So purchase price of 50K. Okay, nice and simple. Refurb of 10K. And then a value of 80K in good condition. And then you're going to have other costs of, let's say, 7K. Okay, so as a bit of an example. So essentially what you'd need for your purchase, okay, you'd need that times 25%. So obviously you need your deposit. And then you'd also need that. And then you'd also need that. So 25% of 50,000 is somewhere, if I'm not mistaken, around 17,500. No, that's not right. No, it's about 13,500 so let's call it 13K, give or take. Bear in mind, this will vary. So this is typically properties in the north of England, just so we're clear. So somewhere around 13K, plus your 10K, plus your 7K. Oh. Calm, smashing the marker work today. Okay, so that basically puts you in a position where you need, give or take, okay, 30K per deal. Okay, this is fairly standard. So you 12.5. Thanks, Conrad. So I was pretty close. Appreciate it, buddy. So you'll be in and around this sort of point. Okay, I should have been able to work that out myself. Just goes to show. So typically what we always tell mentorship students, and we also tell people that we work with, you're looking for between 25K to 35K per deal as a fairly standard for a normal vanilla buy-to-let property. Flips can be probably about another 5K on top. HMOs, so HMO, for those of you that aren't aware, is a shared house. So if you think of student accommodation where people rent by the room, okay, HMOs, you typically need somewhere between 40 and 60. Okay, so it's a significantly higher margin. You've got a lot more money invested at the end, but of course you have a higher income off the back of this. Hopefully that answers your question there, Maureen. But yeah, really good question. So somewhere between 25 to 35K is pretty standard. Now, if you're shy, we actually teach people how to raise finance, which obviously you'll be aware of as you're a mentorship student. And we'll go through the structure of how that all looks as part of your mastermind and mentorship with us. I know you guys are brand new to the mentorship, which is brilliant. And I'm very excited to work with you guys. So awesome. Okay, so John, with the example on the whiteboard, if you were to borrow money from friends and family, how would you get money back to them with interest? Okay, brilliant. So really, really solid question. So typically what you're going to be looking for on properties like this, where you have money invested at the end, money left in, you're going to be looking for longer term investors. Okay, so you're going to have potentially a shorter term investor that will invest for the project. And then you want a longer term investor that essentially wants to park some money for a fixed interest rate of whatever you agree, 4, 6, 8%. On an annual basis, which if you consider the bank is giving you nothing, they will be comfortable leaving their money there. Now, obviously, understand that you will have more equity in the project than the money invested. So if all hell breaks loose, you can always just sell the whole project off. But the idea will be that you need to switch out a short-term investor to a long-term investor, or convert a short-term investor, give them back a large chunk of their money, convert them into a longer-term investor. My suggestion when it comes to investors is you want to be lending money for a minimum of 2 years. Really, you want to be between 3 and 5 years, and you want to build a solid relationship with them and just try and keep them informed. Unfortunately, we've learned a lot of lessons around investing, some good, some bad. Some we still be massaging and dealing with in the background off the back of some terrible decisions we made, which basically gives us the credibility to be teaching this and to teach you how not to make the same mistakes that we did. Because we've made them. You don't have to go through those pains and pangs as we did. Hopefully that answers your question there, John, but really, really good question. Thank you. Right, okay, so we're pretty much at the end of our hour. What I want to do is I want to give you a quick summary in terms of what's being covered throughout the call, and then we'll wrap it up. I mean, it's been pretty exciting anyway. I've thoroughly enjoyed our first call together. Hopefully the road noise isn't too loud for you. We're pretty close to a road here. So in terms of summary, right now, obviously, we're going through the coronavirus and the headache around that and how that affects people's personal lives as well as their property portfolios, as well as the property journeys. The things that you should be doing right now for yourself is making sure you get yourself educated, do your research, do your studying. I mean, you literally have the perfect time to incubate and learn as much as you possibly can. So when you do get out there into the big bad investing world, or if you get back into the big bad investing world, if you're already investing, you can go there fully armed with a lot more information than you already had. Now, in terms of what I expect to see within the marketplace, as soon as the lockdown is released, I think there's going to be a lot of investors that are going to pussyfoot their way back into the marketplace. So things are going to be a little bit slower in terms of their investment starting point. But as soon as they start to get a little bit more time and everything and confidence back into the marketplace, they will start to invest. But what that means is in that lull, where a lot of investors are still deciding whether they want to get back in yet, you'll have an opportunity to pick up a lot more better deals than you typically would. So it's the perfect opportunity to get yourself out there, get yourself investing. Okay, just make sure you do it sensibly, smartly, and you're well educated. Don't just throw money at it and hope it works. I've seen a lot of people lose a lot of money in this game. Then once the marketplace starts to regain confidence, the 450 billion that's back in the economy will have its effect in all likelihood, and it will drive the marketplace up at a faster rate than it was already going, which I assure you, it was going pretty quickly already. It'll actually go up at a faster rate at that point, as well as the incentives by the government, the 0.1% Bank of England base rate, which will also continue to drive the number of people into the marketplace and enable the entire industry to be skyrocketing wonderfully for those of us that already have portfolios and would look to sell at the top of the market. Then, of course, we covered a couple of exercises, which I thought was pretty cool, showing you how you can buy a house for £10,000. Also talking to you a little bit about how much you need to invest. And sort of that's it. I mean, it's been a wonderful call. I've had a great time chatting to you guys. And as our first episode of the Property Channel, I think, it's gone particularly well. So thank you very much for taking the time today. If you have any questions, if you're catching this on the recording, please just drop it in the chat box. whether that's on Twitter, whether that's on Facebook, whether that's on LinkedIn, or whether that's on YouTube, just drop a message in the chat box. We actually have a Facebook group that we've created called the Katana Property Channel. I'd urge you, just get yourself over there. You'll be kept up to date with all the updates. We do most of our conversation there. That's basically like a live mentorship group for anybody who has any property questions. So just get yourself on there. It's absolutely free. There's no cost. There's no maintenance. There's none of that stuff. I'm going to be heading it up, and I'm going to be there just trying to support you guys, give you whatever answers, whatever help you need. So get yourself over there. It's called the Katana Property Channel Facebook group. I look forward to seeing you there. It has been an absolute pleasure. Hopefully you're picking this up and you've had a good time, and I look forward to seeing you again in the future. Thank you very much for your time. Bye-bye.